Hello traders, welcome back into another video. In this video, I'm going to teach you exactly how to identify a reversal in the price action. If you remember, at the New York Killzone, price is going to either have a continuation higher or lower, or we are going to have a complete reversal. So in this video, you are going to learn exactly how to identify a reversal inside the New York Killzone. First, you need to identify your bias for the day. As we can see, right here we are bearish. We have a retracement higher and we have a continuation lower. Currently, we are having another retracement and we are most likely to continue going lower because we are overall bearish. Right, so let's mark out our bearish PDRAs. We have here a daily order block. Let's mark it out. Also right here, we have a daily fair value gap. Right here, we have our fair value gap. So let's mark it out. All right, so remember, if we are overall bearish, price should respect bearish PDRA. That means if the price is to continue higher, we should see price respect this bearish PDRA and then it should continue moving lower. You want this PDRA, this one-day fair value gap, this is an order block. We want this one-day order block and this one-day fair value gap to be treated as a resistance, and then the price should continue moving lower. Alright, so now let's go on into the 4-hour time frame. Let's go into the 1-hour time frame. Let's wait until 10 a.m. since we're only trading the New York Open for this example. 8 a.m. and right here. Remember, the ICT due to swing, if the price is to continue lower, price should go up first before going lower. Basically, this New York Open reversal is exactly just like that. We have here our guide right here. So currently right here we are going higher. As we can see, price is continue going higher. We have here a higher time frame point of interest or PDRA. This is our higher time frame point of interest. We have here the daily fair value gap and we have here the daily order block. Once the price reaches into that higher time frame point of interest, we might see a buy side liquidity in the lower time frame and we should wait for a market structure shift. Alright, so that is exactly what we are going to do. Let's go into the 15-minute time frame. Let's mark out the 9:30 since this is the New York Open on indices. Right, so we should wait until 9:30. Let's go on into the lower time frame so that we can see more price action and 4-hour entry. As we can see, price is currently going up. So if we are to be bearish, price should respect this higher time frame PDRAs and we should have an entry in the lower time frame going lower. Currently, we are now inside this daily fair value gap. Alright, so we don't have setup yet. Now let's try to go into the lower time frame to see if we have any setup. So right here, we have a clear setup, clear as day setup. If you look closely, we have here a swing high. Price has taken out that swing high, at the same time reacting into our daily order block right here. Let me move this one. As you can see, price has taken out this swing high, fully refilling our 1-day fair value gap, at the same time reacting into our 1-day order block, and we have here our market structure shift. So let's mark this, buy side liquidity taken, and right here we have market structure shift as well. Since the price has already gone down lower, what should we need to do? Right, so we already have higher time frame point of interest, this fair value gap and this order block. We have a buy side liquidity sweep. We have a market structure shift with candle close. Now, what should we do? We should wait for a fair value gap to form and enter into that fair value gap. Right, so now let's see what the price will do. Right, so right here we have two fair value gap. We have this upper fair value gap and the lower fair value gap. So what do you think should you do? Which fair value gap should we enter? This is exactly what you should do. You should use this gun box right here, or you can use your Fibonacci, the 50%. This is the 50% of that Fibonacci. In this case, I'm going to use gun box for easier use. We have this range right here. We have the upper 50% and the lower 50%. If you have watched the premium and discount video, you should know exactly what we need to do. Right here, we have our discount. At the upper 50%, we have our premium. If you want to sell something, you want to sell it at a premium price, right? At an expensive price. Of course, you want to price something at an expensive price. You don't want to sell something at a cheap price, at a discount price. This is the cheap price, this is the expensive price. So, we should sell at the expensive price. You can either enter in this 50% of the range, or you can enter in this upper fair value gap. But for this example, I'm going to enter in this 50% of this range, swing high, stop loss, and target for the nearest sell side liquidity. I can aim for the sell side liquidity right below. And boom, exactly 1 to 2 risk to reward. Alright, so we can aim for this swing low right here. Alright, so now we should wait for the price. Our setup is now complete. The only thing left is our entry. Now we should wait for the price to go back into our entry right here in the 50%. And let's see. And boom. Now we're on inside the trade. Let's see what the price will do. As we can see, the price still went back higher into this first fair value gap, but that's not the case always. Sometimes the price will just go into the 50% and then it will continue going lower. In this case, price still went back higher, deep into the range, refilling this fair value gap right here. We also have our order block right here, breaker block right here. This is our 5-minute breaker block. This is our line of defense, fair value gap and breaker block. And then the price now should continue moving lower. We don't want to see price go above this swing high. If that's the case, our setup is now invalid. As we can see, price respected this breaker block right here and this fair value up right here. It should now continue moving lower. And as we can see, price is now moving beautifully into this swing low right here. This is another sell side liquidity. We have here a fair value gap. The price reacted into that fair value gap and it should now continue moving lower. Another retracement right here. See that? See how price respects our PD arrays. That's how the price should do it. Price should respect bearish PD arrays if we are going bearish. And then the price should now aim for the nearest sell side liquidity. First sell side liquidity taken. It should aim for more sell side liquidity. You can take partials right here. And there we have it. Full take profit hit. Let me remove this. As we can see, this is how we are going to use our one setup for life. This is for the New York Open reversal. Remember, you need to mark out all your PD arrays that the price might react into, especially inside the kill zones. That is where we are going to have a reversal or continuation inside kill zones. Right? So I hope you learned a lot from this video. If you are having a hard time understanding this video, you can watch this as many times as you want, as many times as you need. Right? Thank you for watching. I'll see you on the next one. Peace out.